Is the euphoria over for Tesla and electrical vehicle stocks? There's warnings on the horizon. Stay tuned for more. Thank you for watching. This is Richard with Wisdom Investor. We're going to look at the pros and the cons of the electrical vehicle stocks, including Tesla and others. There's warning signs on the horizon. We're going to cover some of that. We're also going to look at a good ETF that's come out that does cover a wide range of electrical vehicle stocks and components. And we're going to look at the overall market. Now, Tesla's had some massive gains and recently seen some profit taking. Tesla can have profit taking up to 60 to 70% based on past trends of the Tesla stock. So getting a big pullback of 67% is not unlikely. Of course, keep in mind the stock is up over 600% for the year. Stay tuned for the full episode. We've got some excellent news ahead. We're going to look at some highlights here from Global Electrical Vehicle Outlook 2020. This is from IEA.org. Here's a headline here. Global sales of passenger cars were sluggish in 2019, but electric cars had another banner year. Here's a graph that shows what's going on worldwide in electrical vehicle sales. The blue here is China, and the yellow here is the United States. There's a lot more activity right now in China, but you can see 2016, 17, 2018, 2019, electrical vehicle sales have been skyrocketing. Not only do electrical vehicle demand increase, but also the products supplying the electrical vehicles and cars is also growing. So stocks and companies that provide support for electrical vehicles are also growing. The second largest expense that the average family has outside of housing is transportation and transportation costs. We're starting to see some of that come down with electric vehicles. In a recent study, it was found that the average cost to operate an electrical vehicle and electrical car in the United States is $485 per year, while the average for gasoline-powered vehicle is $1,117. It goes on to say here, on top of the savings, electricity rates are much more stable than gasoline prices. In addition to being more efficient, electric vehicles are now able to go much further, going up to almost 400 miles before a charge is needed. Here's the Tesla Model S, says it has a range of 373 miles. So those are some of the pros, those are some of the benefits of electric vehicles. However, we said there's some warning signs on the road. One of those is competition coming. Tesla had the luxury of getting ahead of the other car makers, but there's competition on the way. It said that Tesla has about 16% of the market share right now, but that's going to be shared with these other companies soon. Here's the Hyundai Kona Electric. Nissan has a car out called the Leaf. Here's the 2020 Mini Cooper SE. BMW is increasing their production. The Kia Niro EV. Also, there's the Chevrolet Bolt. Jaguar has their own version. Audi's getting a piece of the action. And there's the Tesla Model S, saying it has a range of 402 miles. And of course, with competition comes lower prices. Many of these companies are going to be trying to undercut Tesla. And with these lower prices, that could affect Tesla's market share. Another warning sign for Tesla and many of the other electric vehicle stocks, they have yet to produce a profit yet. The only reason Tesla could show a profit in 2 quarters was because they had electric vehicle credits. Without these credits, they would be losing money. Another warning sign for the electrical vehicle stocks is they've had massive gains along with no profits, but they've also had this Eiffel Tower chart pattern develop. Here's a comparison with Bitcoin in the yellow as it ballooned higher, and then of course it reached a point where sellers came in and took profits and Bitcoin came back down. We can also see this skyrocket massive move to the upside that Tesla has experienced along with many other electric vehicle stocks. Typically when you get this pattern, the only other side to that is to come back down. The question is, how low is the Tesla stock going to go? Now the Tesla stock has recently had some profit taking going on. The good news here, it has not broken some important support levels. So it looks like the Tesla stock is trying to work its way back up to the previous highs. That is possible to happen. Now, if you do not want to pay $419 per share I want to show you an ETF you might be interested in. Here's an ETF, fairly new, couple years old. Symbol is HAIL. It's a SPDR S&P Kensho Smart Mobility ETF. The HAIL SPDR ETF. This ETF invests in various EV stocks, electric vehicle stocks. Here's NIO is the top weighted, it's 5.74%. You got Workhorse Group at 5.45, Plug Power 4.16, Tesla at 3.67. So you can diversify your holdings by investing in this ETF. So if you don't want to put all your money into the Tesla stock, you can use this SPDR Kensho Smart Mobility ETF and diversify your holdings. NIO is a Chinese stock. You can see here it's done quite well. Workhorse Group, WKHS, is also taking off to the upside and has done quite well despite some of the profit taking that's occurred with other stocks. Let's look at the overall markets here. We're looking at the S&P 500. We had the dip back in 2018 and then the dip we had in 2020. So here we are. We're right up in some resistance areas. Typically, you can see the S&P 500 eventually comes back down to this 200-day moving average. This is actually 250-day moving average. So we're in an elevated stage. So right now, for those investors that are long-term, basically dollar cost averaging is the way to go. I would not try to put all my money to work up at these highs here. Again, buy low, sell high at the top. Now, right now, we've got the election going on. People are voting right now. They'll be voting until November 3rd. There could be all kinds of rumors that come out that affect the markets. We could get some bouncing around here. And so we're going to have to watch this closely. But right now, dollar cost averaging is the best option. We're looking at the IWM Russell 2000 small caps. If we get any kind of a rotation in the market out of large caps into small caps, we want to keep our eye on the small caps. I don't have a buy signal on this, but we're going to keep our eyes on the small caps here. Here's the NASDAQ 100 QQQ. Suffered about a 10% correction, but it's still holding support areas, and we'll be watching to see if this starts to move back higher. Microsoft, part of the QQQ NASDAQ 100, also is holding some important support levels. Apple stock is still looking pretty strong, holding some support levels here about 109. Now, Apple does have some news coming out on Tuesday, and we'll see if that can generate some movement to the upside for Apple. But really no damage at this point for Apple, just basic profit take. We looked at Tesla and the EV stocks. There's warning signs out there. Stay tuned for more updates. If you have any comments, give us a comment. Thanks for watching.